Your foreign trips and tours are all set to get more and more expensive. The government is now going to introduce, or in fact has introduced, a 20% TCS, or tax collected at source, on credit card usage. Remember, if you are now going to buy an item worth $100, and if you're abroad, you would be paying $120 net amount, 20% of which is about $20, will go to the government. Now, the Finance Ministry, in a very late night notification, amended the Foreign Exchange Management Rules 2023 and included international credit card payments under the liberalized remittance scheme, also known as LRS, from 1st of July, so you still have more time. Now, remember, the use of credit cards in foreign countries while traveling was not included under LRS before. It included debit cards, Forex cards, bank transfers, but this is the first time that you will now have to pay 20% a TCS whenever you make a purchase using your credit card internationally. On the show today, how will the new rules impact foreign travel? How much more money will you have to pay from your pockets in order to travel abroad? And what is the larger impact of this notification? Joining me at this point in time is Ravi Sutanjani, who's a fintech influencer. Also joining us very, very shortly is Adhil Shetty, who's the CEO of Bank Bazaar. With me is my colleague Kartik Malhotra in the studio. Kartik, it's a big bummer once again for those who want to travel abroad.
Absolutely, Shweta. And I think, the timing could not have been worse because it comes bang in the middle of summer vacations of children when most people plan their travels. But yeah, I mean, it's definitely a bummer. And there is no reason for the government to collect this tax at source. With my limited understanding, when the rules on LRS were changed about a month, 6 weeks ago, the problem back then was that it was done in a bid to widen the tax net for the tax evaders. And these tax evaders, again, if you remember back then, the idea was that you will tax high purchases at a 20% TCS, which meant if you are, spending on travel through an agent, if you are spending on luxury purchases that you're making in terms of buying, luxury brands and paying in cash, you pay a TCS. And even incidentally, IVF fertility clinics and payments made there were to include a TCS of 20%. The government was conveniently silent at that time, and the credit cards were not really in the same ambit, and international spend on credit cards. So like you rightly said, I mean, you go abroad from the 1st of July, anytime you swipe your card for a $10 meal at McDonald's, the bill that gets generated is $12. So actually the outgo is $12. It's 20% more. You go, you shop somewhere for $100. The actual amount that gets debited on a $100 bill is $120. Of course, this comes into effect from 1st July, but 1st July onwards, it's definitely a bummer, and you end up paying more. And in a way, I see it as a sort of, tax-free loan you've given to the government, because you can reconcile your books and you can reconcile your tax statements.
But
a year later, once you file your tax returns. So if you travel on the 1st of July this year, you will end up actually filing your tax returns probably on the 31st of July the next year, 2024. So until then, this 20% TCS has actually gone to the government, which you would end up claiming, and the refund of that could come a good 3-4 months even after that. So it's a good 1.5-year window for the government to refund that money if there is any
and to keep it with them until that point in time. Ravi joining us at this point. Ravi, you've talked about what these new rules will mean for people who are hoping to travel abroad, but I want to begin by asking a very basic question. Explain to us what is the difference between TCS and TDS, and thereafter what these new rules will mean for people traveling abroad.
Well, thank you so much for having me. Pleasure, and I think totally enjoying the conversation. So to begin with, right? I mean, first of all, we have to understand that it's not a tax; it's a TCS, right? Which you pay in advance, and you adjust against your advanced tax liabilities. You get the refund later. Certainly, a burden, 20% additional capital will be blocked. Now, what is the fundamental difference between TCS and TDS? So TCS is tax collected at source, which is majorly deducted by your bank or seller of goods. So they collect the TCS on your behalf, pay to the government, deposited against your PAN number, and you can get it adjusted at the time of filing return. While TDS is tax deducted at source, right? So when you get, say, interest on your FD above their showed amount on your savings account, your bank deduct, the TDS on your bank account. So basically, these are the fundamental difference. But I think I've been speaking to a lot of people from finance and business communities, and they are certainly seeing this as a big move. It's certainly going to deteriorate the credit card industry in general. But one thing we'll have to take it into consideration that bank account, debit card, forex card, a lot of these things were already under the ambit of LRS, right? But credit card was not. So I think with this move, a lot of significant transaction that people generally, when they go out on international travel and shopping, now credit card transactions too will be count of LRS, but debit card and forex card was already there.
Okay.
And another catch is the 5% is the TCS that would be applicable till 30th June. So from 16th May, just 2 days back to 30th June, the rate is 5% still, and that would be increased to 20% from July 1.
And does that 20% apply to forex card, debit card, bank transfers, all of these expenses?
So if you go by the rules and fine prints, you'll realize the all other categories. The current is you don't need to pay anything. I mean, till last year, if you are using your debit card at Dubai or maybe at Europe, you are not supposed to pay anything till 7 lakh rupees. Post 7 lakh rupees, your bank was supposed to deduct 5% TCS on aggregate amount. But with the new changes from 1st July onwards, forex cards would also be impacted along with credit cards.
So Ravi, just help us understand here what seems to be the rationale for the government really going ahead and making this move. How does it really help the government, in addition to, of course, getting this additional 20% on international spends, which lie with the government until the reconciliation happens at the taxpayers' end at the end of the financial year?
So, before that, if you look into the data, I think the last financial year from April to February, Indians spent more than $12 billion on, overseas travel. And I think close to 6 to 7 billion were part of LRS and the rest of the amount was not part of the LRS. While I may not be the most qualified person to speak on the, intent of this decision, but certainly, the aspiring upper middle class. So it's not only the rich and HNIs, I'm assuming they were already paying the taxes, but 20% definitely seems a blockage amount, the capital, which will be blocked with the government for the next 12 to 18 months. The primary intent could be, to ensure that if you have the affinity to spend on, international travels, you are supposed to, file your taxes properly. So it would be very interesting to compare the number of people who are filing taxes every year versus the number of people, unique people, spending money on international travel. So this could be one intent, I think, what we were discussing on social media and also in communities.
But Ravi, correct me if I'm wrong. If you have a credit card, which means your details are already with the bank, they already have a sense of how much you're spending, because a credit card is only issued when your expenses are calculated.
It's linked to your PAN, it's linked to your Aadhaar, your KYC is done.
So essentially, if the argument is that the government is trying to get hold of more people who are traveling abroad or spending extravagant money, then they already know where I'm spending because they have all my details in.
Certainly. So, even as per RBI laws, if anyone deposit more than 10 lakh rupees to a credit card, and obviously not for digital, even if you deposit by cash towards your credit card bill payments in more than, I think, 10 lakh rupees, it gets reported against your AIS annual information statement. So IT department definitely has that data, but I and along with a lot of people in the communities definitely see as a big blocker for a lot of people who would want to use credit card internationally. So your capital is blocked 20%. So there are multiple ways to track, and you correctly mentioned, right? I mean, be it banks, any financial transaction who is entity who is issuing forex card, or even if you're using your ATM card for ATM withdrawals, bank certainly has all of these data, but 20% number definitely seems very higher.
So, Shweta, I think one interesting, observation, and that is yet to really come out, and I think this is something that we should try, and it'll get disclosed in future also. I was reading somewhere, if you were to make an online transaction using a credit card on, let's say, a Netflix or an Amazon.com account internationally, as long as you're paying in INR, this 20% tax is not valid. But as soon as it's a dollar denomination, when you're spending online, then this 20% TCS will get applicable even on the credit cards that you're swiping within India or the number that you're inputting within India.
Right.
And this, as long as the denomination is INR, it doesn't.
So how do you then track whether your card is being swiped in India?
So usually when you're making this online transaction internationally, you get that option. So some websites or some sellers automatically convert it for you. Some sellers don't automatically convert, so you end up paying in the denomination listed on the website. But eventually, when your bill comes, it is calculated on the dollar INR exchange value on that particular day when you transacted.
Right.
So I think from 1st July, this is also something that could be considered considered and looked at that when you're making these international spends, if it is rupee denominated, rupee converted, it is unlikely to add the 20%. If it is dollar denominated, it sort of adds this 20%.
So what you're saying is essentially if I buy something from H&M and I buy on the website and it's a UK website, so I'm paying in pounds, so it will assume that it's a foreign transaction,
international transaction.
International transaction, so I will have to pay a 20% TCS.
That's right.
Ravi, would you agree with that?
No, I think we'll have to wait for certain fine prints on that. So this is very common query coming from startups. A lot of them spends on USD and GBPs for their software expenses for AWS and whatnot. Same for retail use cases, like you correctly mentioned. If I am willing to buy an electronics from UAE in AED or maybe H&M or Zara from UK, right? In that case, so we need to wait for certain clarification from the ministry or stakeholders, because what I can understand currently from the circular and reports is that if I am swiping my credit card physically at the POS, it will fall under the same 20% TCS LRS purview. But if I am sitting in India and shopping in non-INR currency, at the time of OTP, so you also asked, how do I identify whether this transaction is going to be posted in INR or non-INR? At the time of OTP or third authentication, you get the exact amount, whether it's dollar or INR. But on that note, whether TCS is going to be applicable for transaction initiated from India for international currency, I think before commenting on that, we should wait because there is no proper clarity on this yet.
Okay, Ravi, you are also an ardent sort of supporter of UPI, the entire UPI movement that has started in India, and I've been following your tweets quite closely for the last couple of weeks, and I've noticed you like to sort of keep everybody, your entire community, updated with all the developments that are happening in UPI. Now UPI is also gaining an international currency; it's getting transacted, used internationally as well. So the circular mentions credit cards. Technically, I think it would also mean UPI transactions internationally.
So, thanks for the kind compliments. And I think credit cards is a different instrument altogether. But when we talk about UPI global, or there are few countries where started accepting UPI as a payment instrument. And how does it work? I'll try to simplify it for you and the audience. Is that say I'm traveling to UAE and I want to buy something from duty free. Instead of swiping my debit card and credit card or Forex card, I can ask the person if UPI is accepted, and in the POS terminal in UAE I'm talking about, QR code will be shown, and I need to open my preferred UPI international supporting app, which may be Bheem or Paytm or PhonePe in that case.
That's right.
The only caveat is that I need to ensure that my bank is supporting and live on UPI International by entering one-time 4-digit PIN. I need to enable UPI International, and whatever would be the transaction amount that will be shown by entering PIN, the transaction should be done. However, whether 20% TCS would be applicable on the transaction made at foreign currency via using Indian bank account over the layer of UPI, again, it should be part of LRS as per new guideline. But again, for the fine clarity, I think we should wait. But I am definitely speaking with people. And we will share more updates on Twitter maybe once we have final clarity on that, whether UPI will be part of this ambit or not.
Okay, so that's an interesting conundrum that, would people traveling abroad and wanting to spend abroad, because since LRS is not applicable on cash, I mean LRS is, but this 20% tax, TCS is not applicable on cash. It seems to be that this move is actually going to encourage people to convert currency and carry physical currency notes as opposed to carrying plastic. And that has its own downsides of theft, for example,
so
of fake
if
currency,
I were
for example.
to convert my currency, I wouldn't be paying the 20% TCS?
It doesn't seem to be the case because, the circular clearly mentions that this is applicable on credit card spends internationally.
Okay.
So if I go to my bank and if I take, dollars or pounds or AED as the case may be, depending on my destination of travel, as long as that money is debited from my bank account, and I'm getting, cash currency in exchange of that, it doesn't seem to fall under the ambit of the 20% TCS.
Okay. Adhil Shetty, CEO of Bank Bazaar, joining us at this point in time. Adhil, appreciate you taking time out. I want to, directly begin by asking you, how do you read government bringing credit card spending under LRS? What are the long-term, short-term repercussions for people? I mean, in the short run, obviously, people are expected to pay more when they take a foreign trip. But what are the repercussions of the said move?
So, basis this rule change, international credit card spends, which were exempted from being under LRS and exempted from TCS, have been brought under the TCS regime. So, what this means is if you're using your credit cards for spends starting July 1st, there is a tax collection required at source, and this is expected to be 20%. Now, I think what is not clear is how all of this is going to be activated and tracked, right? Because you go to a foreign hotel, you swipe your card, how exactly is the 20% going to be collected and then remitted in your name? And how are we going to exempt only certain expenses, which are for education and medical expenses? So while the operations is not clear, right? What we are clearly seeing is it does clearly appear to be a move to track international credit card spends better. The TCS amount is high, it's at 20%. And how this is going to be operationalized, because people spend on their credit card at multiple merchants, and how is this money and this TCS going to be collected? The operational aspects need to be figured out and explained over the coming weeks.
So from what I understand, Kartik, is that, and Adhil can come in here as well, is that if I were to go to a grocery shop and buy something, I would have to pay TCS there, or if I were to go into a retail store and buy something, pay TCS there. But let's assume I'm going under medical circumstances or for educational purposes, buying books or buying medicines. Would TCS not be applicable there?
Yeah, so I think TCS, as it was mentioned in the previous circular, was not applicable on international education to a certain limit. Memory sort of eludes me, I don't know what that limit was. What is 7,50,000? So up to 7,50,000 rupees, it wasn't falling under the ambit of TCS. But the grocery store example that you mentioned, and that is where I think the kind of entries I suspect we will see in our credit card statements are going to be two kinds. And I don't know, Adhil is the expert here. Adhil, good to see you after a very long time, and thanks for being with us. But my hypothesis is that there's no way that when you make a transaction at a grocery store internationally, let's assume for $10, the bill that gets generated is not going to be of $12 because the retailer, the seller there is not taking this additional $2 on his books. So my understanding is there are going to be two entries in your credit card statement. One is the $10 that goes in the name of the seller, and the other is the $2 that goes in the name of perhaps your bank account or your credit card issuer, which then eventually gets deposited to the government coffers, is my assumption.
Okay.
Adhil, does that seem to be the case?
Yeah, you made a few great points there, right? And let's just logically think through this, because we'll wait for clarity to emerge. But let's logically think through, and everything you said is correct, right? So when I swipe my credit card, and here's an interesting point, most credit cards can be used for international swipe and international spend. However, you need to enable it. So this is something people need to realize. The current RBI rules require that while your card can be used internationally, you need to go to the mobile app and enable it for international spend.
That's right.
Now, when I swipe internationally, right, at a grocery store, let's say the bill is $10. Now, when it appears in my credit card bill, not only do I see a swipe today for $10, but I'll see a Forex charge as a separate line item. So the Forex charge, let's assume, is 2%. It'll say that $10 is how much I paid the merchant, and your Forex charge and the surcharge on the Forex charge is 2% of the amount. Now, what could technically happen, and we still need to await clarity, is another line item, like you said, could appear, which says that this is the TCS.
This is the TCS.
So now you see three line items appearing in the bill. But just keep in mind, we're talking logic here. We have to wait for clarity on how this process will play out, because international credit card spends are very popular. In fact, right, people love their credit card because they can go anywhere in the world, enable in their mobile app saying this is my limit for the day, and they can start spending.
And one of the questions that was asked here on the show before, and I have to bring this up again, what seems to be the rationale behind, not just including the credit cards, but setting a TCS limit of 20%, which many would say is a lot?
Yeah, so let's again attempt to have the data we have to answer the question. So what is the data we have, right? So there is a statement which says that we want to be able to track international credit card spends better because that is a growing amount of spend. So there was a data point available saying that last year the spend has increased tremendously, right? And we're talking about a very large CAGR, over 80% growth CAGR, and saying that the quantum of the amount being spent is large, which is 12 billion US dollars. So one view is we want to track it better by bringing it under LRS. So this is one view. Now the next view, right, is why is the TCS amount so high? So if we were looking to track a certain spend, you can do it at a lower TCS amount. Now the TCS amount applicable post July 1st is 20%. Now there is again an unverified statement which says that, hey, this is the demand from the domestic travel and hospitality sector. But, honestly, I can't comment on that. We're just trying to read, the data that we're seeing come out from the market. And these are the two data points I know as of now.
But Adil, if the intent of the government is to track your spends, see, unless the government really wants to go granular and understand what all activities you're spending on, and hence they need an itemized sort of breakdown of that, looking at the tax that is outgoing, I think it's easy for the government to get that data in any case. Or do you think getting credit card payments data from banks, from RBI, is difficult at an individual level for the government, and hence this TCS becomes an important cog in the wheel to identify payments?
Yeah, so let me just answer it from the credit card perspective, right? The minute you introduce TCS, the level of data and the level of compliance is much higher. So your point is valid in the sense every time I swipe my credit card globally, right? So let's say I have a co-branded credit card from Bank Bazaar and I swipe it in London. Clearly, the line entry says that this is an international spend. Like we discussed, not only does the line entry say it's an international spend, but it loads a Forex charge for that international spend. So that data is being tracked, right?
Right.
But when you have a TCS connected with it, wherein money has to be taken, given to the tax department, that builds a level of compliance, which I would say is far larger than a line item in my credit card bill. So I think that's where this tracking is headed.
Right. So I think unfortunately what I see as a trend, well, maybe not unfortunately exactly, but the trend I see is that a lot of people are now going to opt for top-ups on their credit limit. Banks are going to introduce cards with a higher credit limit, and they will possibly charge an annual fee to enable that. And this becomes perhaps an opportunity for banks also to try and squeeze a little bit more out of users and bankers and spenders like you and me.
And the government
and everybody sort of makes hay as the sun shines on sweaty heads like ours.
Right. I think before we move on, and last question for I think both Ravi and Adil there. It appears to be a concerted effort by the government to make foreign travel more and more expensive. Just a couple of weeks ago, we discussed extensively on the show about how TCS on foreign tours and travel packages will now be to the tune of 20% from existing 5%, and that too is applicable from July. Now, credit card spends are going to be charged to the tune of 20% TCS on foreign transactions. So all in all, if you're going abroad as of July of this year, it's going to be more expensive. What do you tell your people, or in Ravi's case, what do you tell your audience that says the government is taking a lot more money from our pockets than we can perhaps spend?
To be really honest, and I think before I answer that one point, so there won't be 3 line of entry, I think 4 line of entry, right? So when I am swiping my card at one of the international destination, apart from obviously Forex markup, there will be GST too. So I think we are not taking that into consideration. Right. So, 2-3% Forex markup, then you have 18% GST on the amount, then apart from that 20% TCS. One reference without taking name, last year the similar TCS guidelines impacted a lot of platforms which were kind of Forex plus prepaid, operating into Forex plus prepaid card module. And I know I've seen that in my app only, where, whatever the number of transactions you make, there will be only one entry of the TCS amount. There won't be like, if I'm making 10 transactions, there won't be 10 TCS deduction entry in my credit card statement or Forex card statement. So we'll have to see how infrastructure and banks are going to work on the compliance part. But to be really frank, this will certainly make a lot of people think that the 20% extra amount that they are supposed to keep that as a capital that will be blocked for the next 12 to 18 months is certainly going to put a very important part in the decision making for, say, a lot of
Okay.
leisure travel, say for Europe or Maldives. You know that, okay, if 5 lakh was my budget, now my budget has increased to 6 lakh rupees, and I won't have access to additional 1 lakh rupees, say, for the next 12 months or 18 months.
Right.
This is my limited view on this.
Right, right. And Adil, how are your customers, clients feeling at this point in time?
Is cash going to be king, Adil?
So see, a lot of the customers in Bank Bazaar are asking the question, but this hits much closer to home. My dad is going on an international holiday on Sunday, and he's been calling me saying that, Adil, what does this mean? So I feel let's give this a few days for clarity to emerge. I think that this is an announcement by the government which happened on Tuesday. There's a lot of work which everyone needs to do, including on the bank side, to be able to manage all of this. I think it's good to discuss it, good to try our best to understand it, but I would like to give it a week's time for full clarity to emerge, because a lot of voices are being heard. Everyone's thinking through this at the highest levels in the industry. Let's give a week to 2 weeks for clarity to emerge.
All right.
Great. Adil, join us back after a week, and hopefully by then, we should have some data on the Bank Bazaar platform also in terms of what kind of traction you have seen, or what are the ups and downs you've seen in demand and queries on credit cards.
We will come back to you. Adhil Shetty, Ravi Sutanjani, thanks very much for your time on that story.